This is a presentation on Samsara. For anybody who doesn't want to sit through a 45-minute video, I'll give you a brief introduction here. So Samsara is an Internet of Things company. So they help companies gather data from their assets so they can interpret that and then make better decisions. The company is run by the founders, the CEO and the CTO. It's riding everybody's favorite mega trends, real-world AI, supply chain digitalization, sustainability, safety. Their business model scales with assets because they track the data that these assets generate, and so it doesn't scale with more people, which is great because in a time of AI, we're probably going to reduce the number of people working for companies, so that's a benefit. They partner with the largest and the most complex organizations. Once you get into these companies and you do a great job, they really want to keep you and keep working with you. The amount of spend that they target and the type of spend is operating budgets. Those are usually 80% of these companies' budgets, and they're much more discretionary. So the management, the lower management can make decisions. If they can buy a service or a product that helps them save money in the short term, people are happy. And that's really the case with Samsara. They have the optionality to move into many different verticals, so not just safety and route planning, but you can think of any other stuff. We'll talk about some of those next, and any type of segment and customer. They have Mark Andreessen on the board, a really good venture capitalist. They have strong revenue growth and a good business model in terms of margins. They're still pre-profit, which is great. We're early if we're getting into this. And I think overall, really great company. The way I see Samsara is a tech-focused company that's coming into all these old businesses, looking at their systems and saying, how can we do this much better and get a much more interesting user experience? Think more Uber app than big SAP enterprise system. And how can we help these companies get insights from their data so that they can make better decisions? So overall, a really interesting company. So a quick description of the things I look for when picking stocks. I look for exponential growth potential, so the stock price needs to be able to go up a lot, but driven by fundamentals, by real business fundamentals. Championed by experts, meaning that other investors that have a really good track record invest in the company. I have a high risk tolerance. Since these companies need to grow so much still, a lot can happen. So it's okay if sometimes it doesn't go according to plan, as long as most do. And I have a long time horizon. Since they need to get all the way to profitability, sometimes it can take years, which is fine. When you invest early, you can get a better price, but sometimes you need to wait a couple of years. So a quick disclaimer, this is my opinion, it's not investment advice, do your own research. And a quick overview of what we're going to talk about today, going from their history to the people involved, the technology, their business, and why I think it's a good idea to invest. A quick view on the history. So Sanjit and John, they worked together in different capacities. It's their third venture, Samsara. So they first started working together at MIT as PhD students on a project RoofNet in the computer science AI lab at MIT. From that, they spun out with basically a product and with Meraki, so founding a wireless networking equipment company. So this was funded by Google and Sequoia. Sequoia being a really cool venture capital firm. They went on to sell that business for 1.2 billion to Cisco in 2012. Then they looked around a little bit, lived their life, and in 2015 got back together to start Samsara. From 2015 onward and building that business up to the IPO in 2021, they had several funding rounds that were led by A16Z, so Andreessen Horowitz. Mark Andreessen is on the board of this company, like I mentioned, and General Catalyst. And they've had funding rounds, so from 2016 up until 2021, from Series A to Series F, raising close to $1 billion in funding. And then they went live on the stock exchange, New York Stock Exchange, raising $805 million at a valuation of $12 billion in December of 2021. So here they are, Sanjit Biswas and John Bickett. So at Samsara and at Meraki, they have a bit the same setup. So Sanjit is the CEO, John Bickett as the CTO. And of course, it's great when the founders have already founded different companies before, but I wanted to give a few examples of why that is great. First example goes into really cost structure. So loosely in their quote, in our first company, we underpriced the product massively because we didn't understand how much it would cost to run the rest of the business. You know how much the hardware costs, software, cloud services, but you don't think about sales commissions, support costs, and all the things that go into making a business sustainable and scalable over the long term. So having that sort of P&L mindset, I think, is really healthy if you want a company that has good margins at the end of the day. And then secondly, the way they sort of generate product ideas. So they talk about this customer feedback loop, saying many companies start with the technology, and it's like throwing a dart from across the room, trying to hit the bullseye. It's very hard. So they discovered that it's much better to be what they call like a heat-seeking missile. So you go to the companies, you talk to them, you see what their issues are, and from that you come up with products to help them. And you can iterate on that and basically do that endlessly, come up with new things to support these companies. And then thirdly, which I think is also very important, is on culture. So like they say, they realize they cannot be everywhere at once. So they had to come up with a way, a shared language or DNA of the company that goes into how they want to work. You want to be very deliberate about engineering the culture to go meet the business objectives, which I think is correct. If you really want to be as aggressive as some of these companies are, everybody needs to be engaged and focused. And you cannot be on top of everybody all the time. And these guys have a lot of employees. And so you need everybody to adhere to a type of culture of excellence that they go after. Here's a quick look at some of the other people on their management team. So I think the common thread is they have all worked together, mostly at Meraki, and the backgrounds of all these people are really high level. You see a lot of Stanford, MIT, Apple. This guy, Kiran Sekar, Chief Product Officer, you can see him in a bunch of their videos. Seems like a really solid guy. And then their board of directors is also very high level. So a lot of former CFOs, CMOs, CEOs from big companies. But the one that stands out the most for me is Mark Andreessen. Also has a big stake in the company. He's the founder of Andreessen Horowitz, A16Z, which is a venture capital firm. So these companies basically give money to startups to fund their businesses before they got into that business themselves. So they also started their own businesses that they ran. But when they started this fund, they said, we want to do more than just give money, which is what they apparently did by the time when they started. Other companies, I mean. So what they wanted to do is give the CEOs of these startup firms access to any type of expert that a big name CEO usually has access to. So they infuse these companies with a lot of expertise and connections. And so I think an interesting way to understand the sort of greatness of Mark Andreessen is to look at a quote from Peter Thiel, who is another legendary investor. So what he said is, Mark Andreessen is a force of nature in tech, someone who doesn't just ride waves but creates them. He invented the browser with Netscape, fundamentally changing how we interact with information. As a venture capitalist, he fueled revolutions at Airbnb, Coinbase and Stripe through Andreessen Horowitz, while his policy, advocacy and investments in defense tech like Shield AI define national security. for a company like Samsara, Mark's strategic brilliance is rocket fuel for transforming physical operations. So high praise. And interestingly, from this quote, because I didn't necessarily look it up for Samsara, Shield AI that he is involved in, Gary Steele, the CEO, is also on the board. And so Shield AI is a defense technology company specialized in artificial intelligence, powered autonomy for aircraft, drones and unmanned systems. And they also have some enterprise products. Purely me speculating here, but I really wonder if this is not a first step of Samsara getting into defense, which is could be a very interesting move that you see at a lot of other companies too. Archer, for example, Palantir is deep in defense, so that could be really interesting. So all in all, a really strong board of directors. So let's have a look at the ownership of the company. So this is some data that I pulled from their proxy statement. If you look in this column, Class A, those are Class A shares that you and I can trade. Here they have one vote, they represent one vote per share. In Class B shares, every share represents 10 votes. And then when you look at the distribution of these stocks, you see that the three guys on top, Sanjit, John, and Mark Andreessen, they really own a really big stake in this company. So in terms of pure value, they own around 46% of the stocks, representing almost 10 billion. So each of them has a really big stake, and Mark Andreessen has about 2 billion of value, the others close to 4. But if you look at the voting rights, driven by those Class B share stocks that they own, they have about 85% of the voting rights. So real control over where they want to steer this company. Other things that you'll see is General Catalyst, so the guys that were part of the Series A to F funding rounds also have a significant share in the company, 4% in terms of value and 7% in terms of voting rights. So diving into the business side of things, I'll show a short clip of Sanjit explaining how they currently run things at Samsara, and he starts by saying how they got in touch with businesses from Meraki when they worked there, and then how that infiltrated their way of thinking for Samsara.
And some of the most interesting customers we got to spend time with were industrials or manufacturing companies, people in operations, because, you know, really you don't tend to get to see behind the curtain that often. How does a warehouse run, or how does a manufacturing facility run? But they all needed Wi-Fi. So we got to see those up close. And it had always struck us that it was like stepping in a time machine. Like this is back in 2015-ish.
Yep.
At that point, smartphones had happened, the cloud wave had already happened, but you'd kind of walk through the door of a warehouse and you'd see, wow, there's like pen and paper clipboards everywhere. There are maps on the wall for people like planning their routes. Like it just didn't feel modern. And so that's where we said, there's an opportunity here to have impact, because that's what we wanted to kind of think about next was, how can you be useful in the world?
So how did you figure out how to be useful?
Well, it was basically that, okay, there's this underserved market. Let's go spend time with them. And our initial hypothesis was that, you know, maybe they need sensors, right? Like temperature sensors for their cold storage warehouses or for those sorts of facilities. So that's what we started with. We built that. It was the simplest kind of product we could get built. And the whole idea was to get close to the customer. We knew that it was probably not going to be the product, but it was essentially an excuse for us to talk to real people. It became very clear to us that their warehouses were not like having refrigeration failures that often. It was 2015, that stuff had gotten really good. But the weakest link for them was actually understanding their operations. So they had no idea where their drivers were. They had no idea if stuff was kept cold, you know, that whole time, et cetera. And when they showed us the tools they were using, I remember vividly, one of the customers had an interface and it was running on MapQuest. And if you kind of like, it's like a kind of throwback to the 90s.
Yeah.
But that was, you know, happening in 2015.
So how would they run on MapQuest? Like how would that even work?
So MapQuest had an API of some kind, and there were what they called breadcrumbs. So you get an update on the map every somewhere between 5 to 15 minutes. And just think about how far your DoorDash order moves in like 15 minutes, right?
You can go from like waiting to pick up to like, it's here.
Yeah, exactly. And that was the customer experience. So when we saw that, we said, okay, what's the more modern way to do this? And so we started with real-time GPS tracking. It kind of felt obvious to us, like that would be something useful for the customer. But we knew that once we did that, we'd be able to kind of piggyback off that use case and find some other adjacencies.
So hopefully that gives you a good idea of how Samsara goes about their business. So here we really get into the nuts and bolts of Samsara's business. So basically what they do is they allow companies to get data on their operations. So for example, a transport company that has a whole fleet of trucks, or you can think about UPS. Maybe before they were just a bunch of trucks riding around and you don't know much about them, you call them to see where they are. The goal of Samsara is to get data from all these different assets. So for example, they have several different dash cams, so cameras that you can put inside of trucks to see both what the driver is seeing and to have a view on the driver. They have a couple of safety features that are really interesting. They have equipment monitoring devices. So for example, asset tags. Let's say a company has suitcases with really expensive equipment in them, and they have 100 of them, and they frequently lose them, which is very expensive. So with these asset tags, you can keep track of everything. And they have more sophisticated ones at tracking level in fuel tanks, things like that. They have site gateway products, so this is where you can attach a bunch of security cameras, for example, to a model that you can then pull out. For worker safety, they have some assets, so the Samsara wearable, they just came out with that. It's a device that frontline workers have on them, so you know where they are, but they can also press a button. Maybe somebody's working in a factory on their own, so to make sure that they're okay, you can have these type of tracking devices. So a bit of an overview on all different devices that collect data from a company's physical operations. So just having data is not really interesting. So that's a bit the legacy system view, and they explain it quite well here. It's a quote from John Bickett: moving from a system of record to a system of prediction. The point is to do something with the data, to run your operations better, to make better decisions. And so Samsara has an open platform that they integrate AI into, called the Samsara Intelligence, and they have partners that integrate their apps into the open platform. So they have like more than 350 different partners who supply their apps basically. And so Samsara takes the data from all these different data capturing devices. They use that to train AI models, and all that data gets pulled into the open platform, in which also click these more than 350 partner integrations, these partner apps. All of that managed with Samsara Intelligence, or integrated with Samsara Intelligence rather. And within that platform you have different types of modules. So safety and risk is a big one. We'll have some examples later on about how Samsara helps to keep people safe, which is key in these operations companies. First priority is always safety. For the employees, but also because there's a lot of costs that are generated and following through accidents and incidents. Compliance, fuel and energy optimization, security, efficiency, sustainability. So this whole suite of products within this open platform. And in the traditional sense, so this open platform is what you would call a fleet management platform, a centralized system that helps businesses track vehicles, optimize routes, monitor driver safety, and automate maintenance. It integrates with GPS tracking, telematics, and compliance tools to improve efficiency, reduce downtimes, and lower costs. So really a tool, a platform that a company uses to run their operations. So here are a few examples of products that Samsara came out with at their Samsara Beyond Day. It's on YouTube. It's quite interesting to watch if you're interested. And so All of these products are generated in the way that Sanjit explained a bit, by talking to their customers and see what else would be interested. So these are really the latest additions. And so just to name a few, they came out with commercial navigation. So when you drive somewhere with your car, maybe you use Waze or Google Maps or whatever, you need different information than if you're driving a 30 or 40 ton truck. So what did they do? They have their navigation app, and they uploaded all commercial navigation information that is available. And so now you can see what is the weight maximum on certain roads, how high bridges are that the trucks need to fit under, if you can go somewhere with hazardous material, so all facilitating route planning. Then again on route planning, so one thing they came out with is, let's say you have a cake production company and you need to deliver every weekend cakes to 50 different locations. Samsara has a tool that when plotting all these locations and using AI figures out what is the fastest route with the minimum amount of trucks needed to run this planning. Instead of companies just using maps and manually figuring out the best routes, it calculates them for you. Another interesting one, they integrated weather intelligence. So now on your maps and your routes, and when you're tracking where maybe all your different workers are, you get weather intelligence. Maybe there's a storm rolling in, and you need to to alert your drivers to these hazards that are coming up, so that they can maybe turn around, they can wait, and really proactively attack it. And for that, they also came out with something really interesting called Street Sense. As you have all these different companies pulling in their data into their open platform, they have so many vehicles on the roads, all with cameras. And what they will introduce in this Street Sense is that companies can opt in to have their cameras joined in this network, so that everybody can see what they're looking at. Of course, it's anonymized, so nobody can see the driver or anything. But because there are so many people on this platform, almost anywhere you have a view. So let's say your truck is driving from point A to point B. Somebody else's company truck is already between point A and B and having a clear view on the road, and you can see that view from the camera in that truck's cockpit, and you can sort of decide on what to do. Maybe there's a flooding on the street, and you can see if it's already happening. So really interesting use of that big box of data. And then one thing that I found really exciting, it sounds a bit daft, but because it's really going to a bit of a different vertical, is that, okay, you have the data on the trucks, where you maybe have some statistics on how long ago did we do our latest maintenance on it, what is the age of the truck, whatever. And usually what you have in these companies are maintenance programs that are linked to your enterprise finance system, that you manage your assets with. And these systems are, again, they're horrendous. So what did Samsara do? They said, so you have your own trucks and everything with data tags, and then you have a different program where you manage your maintenance and all your spare parts and everything. If you want, we can make it for you, and it will sync up with the data on your vehicle so that you know exactly when to do the preventive maintenance. You can scan invoices into the system using their AI recognition software, and again, giving companies the real Uber app type experience instead of these clunky ERP systems that drive everybody nuts. And so that's why I say it's like an ink stain spreading across the enterprise, every time going a little step further into different verticals. So a lot of cool innovations coming out. So let's look at a couple of real life use cases. So for example, Maxim, a crane rental company, they saved 30 million in maintenance costs by switching from a reactive to a more proactive approach. And a lot of that is going to be due to sort of the legacy system they were probably using, where the systems are very hard to use. You basically work for that system to make sure it's being kept up to date instead of the other way around, which what Samsara does. They give you proactive insights on things that could become issues so that you can tackle them before they become issues. And usually to do emergency maintenance on things is much more expensive than just doing the preventive work. So they saved a lot of cost by that. Another thing they've done is to save on more of the safety side, so reduction in harsh driving, like braking fast or speeding, leading to less incidents probably. And they see here a 30% reduction in liability claims following these incidents that you could have. So really just tangible results. Another example, a flooring manufacturing company, Moat, they saved almost $8 million by going from by using a planned versus actual analysis on their mileage, so to see how many miles their trucks are driving. If you optimize the routes, like we discussed in some of the previous slides, if you reduce the number of miles you're driving, you reduce fuel costs, which is great. And then additionally, they saved $500K by right-sizing the fleet. So saying, okay, if you drive optimal routes, you maybe need less trucks, so you can save there. And so there are multiple other instances. So for example, here these guys found back stolen vehicles because of the tracking, so making a big saving. So across the board, these are really tangible results, and that's what these type of companies are looking for. And every year they get challenged by management to find productivity, to reduce their costs. And then if you have a company like Samsara that can generate and help you generate real savings and real improvements on safety, but also actual cost, that is a real no-brainer. And then zooming out a bit, so Samsara has all these different companies entering the platform, which gives them a really interesting data set. So as they're saying, they're building one of the world's largest connected operation data sets, 20 trillion data points so far, 90 billion plus miles driven, 300 million workflows digitized, which is becoming like a flywheel for product innovation. So they have over 200,000 customers where they've implemented their technology. And then, so they make products that generate a real clear and quick ROI, so return on investment. So you spend money on their product, but you get savings in return quickly. As they customers adopt their technology, they also feed data into this system again, so they contribute their data. And that growing data set allows them to expand into new areas. So for example, I mentioned the maintenance software that they went into and create all these new products, which is really a flywheel, as they say. So it's a self-reinforcing growth that they have there. So that is really interesting about interesting part of Samsara's business model. So a few words about their manufacturing model. So they have a fabless manufacturing model, so they don't have factories themselves. They work with partners, so this means that they don't have to spend capital expenditures of CapEx on building these factories. It's good for resilience because you can have multiple suppliers making the same parts for you, so that if one goes down, others stand to fill the gap. And it allows you to scale much more quickly because you don't need to do these investments. And so from the data I gather, their supply chain probably looks a bit like this. So you have the R&D and product teams and data teams in the US together with sales working on new products. And then specifically on the hardware side, they then have their hardware engineering and operation teams in Taiwan that work with a lot of different manufacturers, mostly in Asia, to build the different products that we saw in one of the previous slides. And so even though this is spread across many different regions, and that gives the risks, of course, of things, of macro impacts hurting the business, they still manage to do this very well. And of course, this is their business, to run a business efficiently using data. And a really good test was during COVID, where they claim to have come out really basically unharmed. So just to give a bit of a quote on one of the papers that they wrote, we were able to keep hardware production lines effectively running, fulfilling customers' demands over the past 2 years. So this was in 2023 that this came out. Years with industry leading performance. Even during the worst of the crisis, the COVID crisis, we met customer demand and achieving 71% year-on-year growth in full year 2022, while maintaining gross margins above 70% throughout. So even when something as big as COVID hits the company, where supply chains were really disrupted, they managed to make their model work, specifically because that is their business, and to make sure that you run an efficient and as efficient as possible business using data insights coming from all these different data collection products. So looking towards the future, I can't find a really specific roadmap that they have, but looking at their mission, improve the safety, efficiency and sustainability of the operations that power the global economy. They keep their mission quite open, but their approach is really clear. They are inside these businesses, constantly talking to customers, seeing what they can do next. And I really think that approach, as I mentioned a bit, the ink stain going through these different enterprise software environments, just allows them to grab bigger and bigger parts of the pie. And this pie is enormous, because these complex operational companies, they represent about 40%, I think, of GDP, they claimed. So the size is massive. And like I said, maybe also they're looking at going into defense. My feeling is that they are just going to continue what they're doing, talking to their customers, coming out with more products every time, and iterating on that. And I think this can grow into a really massive business just by following that route, as they show with their revenue increases over time. So a couple of words on their Moat. So they have an integration of hardware and software. To get into software, maybe it's relatively low cost to emulate, but the hardware is a different type of investment, working with producers, quite a lot of funds going into that, so that's a couple of steps ahead that they have. They have this large and growing proprietary data asset that they can use for all types of things. Among them, releasing new products really fast, and driving a lot of usage of those products through AI. The strategy they employ is to partner with the world's largest and most complex organizations, which means that, like I said, they're in these companies, and if you can help really complex organizations work their stuff and run their organizations better, it becomes more and more, or less and less interesting to let go of you. And so they're quite stuck in these organizations, so that's good. They can have a good grip and they can expand. As we've seen in the previous slides, they're resilient to shocks. It's literally their business, smart operation, so they're good at tackling hurdles like that. There's probably network effects going to follow from this open platform, of companies collaborating, going into new verticals, so that's really interesting. They have a very strong management team and culture, and like I said, Mark Andreessen on the board, so that's a step forward that they have on top of other companies, and a strong brand and a growing reputation of trustworthiness. So those are things that are not easy to break, I think. So let's have a look at Samsara versus the competition. So on top there are 3 listed companies that you could invest in just on the stock exchange. So starting with Verizon Connect. So this is part of Verizon. Verizon itself you can invest in. So as benefits, it's a massive company. They have a lot of big clients that they can connect into, but it's not really their main focus, and I'm sure they run it as a separate business, but it's always different than having that be the primary business. I think Samsara's focus and the fact that they integrate AI in such a great way is very interesting, and that they focus on expansion from this category into multiple ones, whilst it seems more like just one vertical for Horizon. Then two other companies, CalAmp, they're really good at in asset and IoT tracking. A bit more narrow on the fleet management software. The founders are not involved. It's a pure professional management team. So again, I think Samsara wins there. Orbcom, more satellite-based tracking. I don't really see the AI angle there so much. Again, it's a professional management team, so that again doesn't excite me too much. And then three names that are that honestly look quite interesting, but they're private, so you cannot invest in them now unless you have a lot of money and access. So Motive, overall, that it looks a lot like Samsara, but the execution just seems a bit a level below. It's the founder that's managing it. There's AI integration. It looks good. But it seems like Samsara really has the edge with everything that's surrounding them, from the management team to the investors to the rollout. Geotab, run by the founder still, really an operations first company. They don't seem to integrate that deep into the companies I'm working with them to expand that much. And also AI is lacking a bit there. Lytics, strong in video telematics for more compliance, but they don't really have the whole ecosystem there. And then I think another quite interesting project, rather, Hive Mapper. So this is a crypto token, actually. Maybe I'll go into that in a different video. So this is a company that lets drivers add cameras to their vehicles, and all that footage gets integrated into a platform that can then be used for more things. So this is like a live Google Street View, and with a few of those products, they're competing against Samsara, but they're really focused on making like a real-time Google Maps, basically. Also really good founder, but so again, this is a crypto token, so you can buy tokens on that. And the interesting thing is that everybody who joins that network, if you get one of those cameras, you get some of their tokens called Honey, that then become worth more as the network scales. So there are some advantages there too, but it's much more narrow than Samsara. So for me, Samsara definitely takes the cake here. So let's have a look at some results. One sort of housekeeping note for Samsara: the only thing that's not straightforward in their business or clear is their fiscal year. It doesn't end on the 31st of December. Rather, it ends on the Saturday closest to February 1st, so basically the end of January. So their year is shifted by 1 month, but then they also call it the next year. So we're now in the year 2026, according to Samsara, and their Q2 ended at the end of July, basically. And so, as they state, our strategy to partner with the world's largest and most complex operations organizations is working and is fueling our growth at scale. So these largest organizations, they define as 100K annual recurring revenue, ARR customers. So customers that spend more than 100K per year with them. They now have almost 2,800 of these customers with an average spend of almost 350,000, and these customers make up about 60% of their business. Then they have 35% made up of 10 to 100K, and then 6% for the rest. So they added in the last quarter about 1,000 new customers. And what they're also tracking a lot is how many products do these customers use, because that's what they want in the end, that these customers grow in terms of usage of their offerings, because that's when their revenue scales. So let's have a look at the results and valuation. In the bottom left corner, you can see an overview of their revenue, operating expenses or OPEX, and their loss in this case. You can see that the growth curve on the revenue is really steady. Every quarter they're beating the previous one, and they're showing a growth rate of about 35% versus the quarter a year ago, which is the normal way of looking at these things. OPEX is also increasing, but not as fast as the revenue is, so that's leading to a decrease in the loss, getting closer to profitability, as you can see here. They're landing at about 15 million in loss, so getting quite close to that break-even point, and then going further into positive territory. Looking at their stock price, from the time they listed until last Friday, not a stellar increase. I think they increased about 80% over this time period. Revenue went up about 180%. So not a crazy curve, especially considering the type of market they're in, the real-world AI element. A lot of those stocks that have sky-high valuations. So still relatively modest, I would say. The analysts, most of them are in either a buy or outperform, and then almost a third have a hold position on it, so that's quite positive. And looking at their future growth, there are a couple of catalysts that can move the stock up quite a bit higher. So like I mentioned, they're not yet profitable. Reaching profitability is always a sort of escalation point that can help the stock price go up. They have not been adopted into the S&P 500 yet. So the biggest 500 stocks in the US are part of the S&P 500. One of the criteria is usually being profitable. Once you're in this group, you have a bunch of ETFs tracking the S&P 500 with a really steady flow of money going into those funds. People put money into those every month, so that gives volume and upward price pressure for these stocks. And then, like I said, the name recognition is maybe not yet there. People are sleeping on this stock a bit, and they don't know that much about it. So the stock is remaining at a relatively low level. If you look at this table on the top here, I made a comparison between some big tech companies. Of course, they're all in slightly different businesses, but just to give you an idea. So Samsara has a market capitalization of about 22 billion, revenue of the past 12 months around 1.4 billion, which means they have a price to sales ratio of around 16, meaning that their revenue fits 16 times into their market cap. Revenue growth of around 36% year on year, like I said. When you look at NVIDIA, for example, so their growth rate is much higher, and there's, of course, exactly in the zeitgeist today, they're at 26%, 26 times price sales ratio. Alphabet, Meta at 8 to 10. Of course, they have some things that they need to figure out. Will Google, Alphabet remain the search market? Meta platform has also got some questions to answer. And then you see Palantir, for example, a stock that people sometimes compare Samsara to. They're not completely different. Palantir is more on the data analysis and usage, and Samsara is also on the bottom end, the data generation through their Internet of Things devices. But Palantir is at 126 times price sales versus Samsara 16. And people would say that Palantir has a really high valuation, but also strong revenue growth, but not different than Samsara. Tesla, another one, of course, quite a different model with 15 times price sales. So it seems all in all that there's quite some room to move here, which is good. Then looking at their full year guidance, Samsara has the habit to be rather conservative in their guidance, so they're guiding towards 20s, mid 20% growth in their revenue. Let's see where they will actually end up. And then, so let's look a bit at the risk, the things that can go, that can have an impact on Samsara's business going forward. One of the things I could think of, you have if original equipment manufacturers like car manufacturers, trucks, if they start to integrate these type of devices themselves, so data gathering devices, so devices that gather the data in these assets and that are able to send it to platforms, maybe that they made themselves or that are open source, bypassing sort of Samsara's product. Full self-driving and autonomy. Once you cut out the people, the safety focus changes, of course. Samsara has a big focus on safety and when there's no people involved, that falls off. They have a global manufacturing footprint, which means that they can be impacted by disruptions and tariffs. Like I showed earlier in the example of COVID, they are really good at managing those types of disruptions because that's basically their business, smart operations. And then fourthly, cybersecurity and data privacy. If there's a really big crisis and all these companies' data are on the street, that's of course a very bad thing for the reputation of Samsara. So all in all, this talk basically ticks every one of my boxes, everything that I get excited about when looking for stocks. I have built my position on the stock. It's not made any money yet, but I think this stock is bound to have a really bright future. So I'll definitely be looking forward to that, and I will keep you guys up to date on the market moves going forward. Thanks a lot for watching, and hope to see you next time.